Hi, everyone. This is Mohammed Akram. We are here to discuss for our webinar series pros and cons of outsourcing operations of alternative investment funds. I have a great panel here. Because of the June 30th deadline, I will not moderate this. I asked this task to Greg to do that. And before we proceed, I just want to say some housekeeping items. So all the attendees will get the CPE if they answer 4 out of 7 questions, and we will send you the CPE certificate by early next week. Greg, all yours.
Perfect. Thank you, Mohammed. So to start off quickly, we will go through kind of the quick backgrounds of everyone on the call. I think most of the attendees probably know Akram and Mohammed Akram as that's kind of the host here. Mohammed, do you want to say before you dive off into audits, do you want to say a quick word about who
Sure.
you are and what Akram is, and then we'll move on.
Thank you, Greg. So we are the boutique auditing firm, provides audit and tax services to alternative investment entities, hedge funds, private equity, venture capital, real estate, private credit. We do everything on the private investment fund space. We don't do anything on the SEC registered fund.
Perfect. So Lisa, your turn. If you want to speak for a quick moment about Fund Services Group and your role within it, that would be great.
So I'm Lisa Head, and I'm a director at Fund Services Group. We are an outsourced provider of CFO, CCO, operations, investor and services, and IT for funds and RIAs.
Perfect. And Marshall, same thing. Tell us about yourself and CSC and your role within CSC, if you could.
Thank you very much, Greg. So CSC is a global provider of corporate compliance and fund administration and outsourcing services globally for both hedge funds and private markets. And so my background is dealing in the outsourcing space and providing services to the operational needs of hedge funds and private markets specifically.
Perfect. And Lance, if you wanted to step in, just let the panelists know a little bit about yourself. I think you're muted, Lance. I can't hear you.
Sorry about that. Hello, everyone. Lance Baker with PPB Capital Partners. PPB is a full-service alternative solutions provider. We assist wealth advisors and investment managers in kind of their private markets journey. We bring operational efficiency and back office support to your business by solving for the logistical challenges that are often associated with investing in private investments. And then we also offer highly differentiated investment ideas for your clients' portfolios.
Thank you, Lance. And myself as the moderator of today's wonderful panel, there's some commonalities, themes around the panelists here to continue that. FundViews Capital, I'm the founder of FundViews Capital. FundViews Capital is a boutique firm based out of Miami, Florida, that focuses on helping emerging managers and wealth managers launch products for their clients as a true fully outsourced structuring back middle office solution, similar to many of the firms up here as well. So if you want to read more about each of our firms, there's in the handout that you can download directly. It has a blurb about everyone's company and kind of in a nutshell what we all do. So I don't have to bore you with all of this stuff. So we can switch over to the introductions. Today's topic is really about outsourcing operations, and you can say that about any industry, but our focus today is on hedge fund asset managers as well as advisors and what that means to outsource operations for these groups. You know, we'll talk a little bit about the history behind you know, the shifts and trends in the past couple decades, as well as what we think is going to happen going forward in the future. And the status quo, right? What is today's you know, function of outsourcing operations look like? What types of functions should you outsource? What groups should you look to outsource to? And how should you thinking about how you're paying for these functions, right? There's many benefits to outsourcing. There's also some drawbacks, as you have to pay someone, but in most of our opinion on this panel, we would all agree you have to pay someone anyway, so you should probably pay professionals to help you do it right. So, to start, we'll talk about kind of the history behind it, the old approach, and what fund managers and asset managers and wealth managers used to do, which is mainly everything in house. And I'll ask each of our panelists to talk about maybe what shifts they've seen in the past decade or 2 decades in the industry, as well as a little bit about if you have a story about something, some function, some operational function that used to exist that no longer exists because everyone outsources it. I think that would be a good little tidbit. And we'll start with you, Marshall, as the first person on the top left of my screen.
So just based on a little bit of history. So I started this outsourcing journey in 2005 when we founded a company called Videos that has since been acquired by CSC Global. And the idea was to create operating paradigms to, 1, reduce costs, and then 2, to provide cost efficiencies and time zone advantages to various functions that hedge funds were actually performing. So believe it or not, this goes way back, but my first client was Pequot, which no longer exists anymore as a hedge fund. But the idea was to look at certain functions that were not necessarily fund administration functions, but from an operational standpoint to see what could be offshored or provided more efficiency with. And we started with processes like recon. And so recon is a very easy one for matching and resolution processing that can be outsourced, or things like shadow accounting where you don't want to run your own software. So I think this process or the evolution goes way back, and I think we continue to see more and more people moving in the direction of using outsourcing for some aspect of their business to help with scale or new asset types or new approaches.
Thank you, Marshall. And Lisa, how about you? What have you seen in your career? How things have changed?
Well, my career, my background is public accounting, and a lot of the changes in public accounting from the early 2000s, when you basically had managers administrating their own funds, doing everything in house, which meant easy testing. There was no test of controls because there was no controls. And then of course you had the 2008, you had Sarbox, and then everybody started having to go to administrator. But now kind of a revert back, figuring out how to fix their cost structure, as Marshall was alluding to, in order to just get more efficiency in their back office operations, so where they can focus on the capital raising or the investment analysis.
Absolutely.
Yeah. Lance, you're up.
I was gonna say, my experience has been, so my first job out of after public accounting was with an investment manager, and I started as the controller of the advisor. Well, my second day there, they said, well, you're an accountant, you can do you're responsible now for the fund account. And that kind of morphed into fund operations, fund legal structure, compliance. It always kind of seems to, kind of emanate from some accountant person within, or some, personnel within the organization. All of these functions seem to kind of get dumped on. And I think what we've seen over the past few years is, sure, they can get these functions done. That's probably not their highest and best use within the organization. And that's where this outsourcing model that we're going to talk about today alleviates that and allows that, valuable person within the organization to kind of focus on other items or other tasks within the group.
Thanks, Lance. And I'll talk a little bit myself about my shorter career than these 3 folks on the call, but I've been around for about a decade in the industry, and even in that decade, you would think, not a whole lot's changed, but a lot has changed. And when I started in the industry, for instance, FATCA and CRS compliance didn't exist. That was something I had to figure out, right, at my prior shop, and figure out how to report and who to report to. And at the time when that came out, no one was really offering that as an outsourced service, and now it's everywhere. There's 3 or 4 or 5 other examples like that. And things are constantly evolving, which is why, it's a hard thing for these investment managers and advisors to keep on top of, both on the compliance side, the legal side, and otherwise. But if you're in the fund management industry day in, day out, and you're focused on this stuff, things like the private fund rule, which is now kind of either delayed or not going to happen, we don't know. But, when that comes out, and there's a lot of talk about how these changes can affect the business and the industry, we can put out content, we can put out, summaries of these changes as they occur, to our managers, that may or may not, care about it, and they may or may not focus on it, but at least they know about it. So there's a complexity and an informational side to it. There's also the efficiency side and outsourcing overseas, outsourcing to professionals in the US that really specialize in this stuff. I think there's benefits all across the board. One of the things based on, we should actually talk about the slide that we're looking at as well. I think, outsourcing used to be, as the slide points out, a function of outsourcing one aspect of the business, right? Outsourcing fund accounting, outsourcing investor relations, picking one piece of the business that may be a pain point, and outsourcing that. And what I think we're talking about more so today than others is outsourcing the entire ecosystem, right? Outsourcing everything to one group of professionals that works with the different outsourced service providers and provides a holistic service, which that's been a trend over the past decade. So we can skip forward a little bit there. So I think we're ready for our first polling question. Once the question comes up, you should have about 30 seconds or so that we can answer.
Yeah, well, which one do you think they're going to guess?
So the question is, what was the traditional perception of outsourcing in the investment management industry? So was it a way to drive more efficiency and reduce operational risk, an opportunity to add new products and enter new markets, or a means to reduce IT overhead and back office burdens?
And we don't get to vote, right?
No, we don't get to vote. I just tried.
Yeah.
Can't vote. All right.
That's another polling question. I'm just launching.
Another polling question. All right. Polling question number 2. Reasons why firms choose to outsource their investment management functions today. So is it A, to incur a significant investment in hardware and software? B, to have more control over compliance requirements? Or C, to be current on latest technology and for business continuity? Perfect. So, Mohammed, when do they see the answers? They don't see the answers at the end?
Yes, I mean, they will submit the answers, and irrespective of how they submit, they will, as soon as they are submitting the answer, they will get the CP certificate.
Got it. Perfect. So we'll talk quickly about the outsourcing adoption spectrum. So let me read through some of this. Due to changing dynamics of outsourcing, firms now have the flexibility to customize their technology solutions and services based on their specific business needs. Co-sourcing arrangements are also available. So Marshall, to kick us off, I don't know if you want to talk about how CSC kind of focuses on co-sourcing opportunities.
Yeah, I think what we're seeing is there are 3 different business models that people need to choose from or adapt to, and they're not necessarily static, right? It's kind of a spectrum. So we'll do everything, or we see people that are looking for low level or kind of staff augmentation alone. Let's say you're starting a credit shop and you need some people that understand loan processing, and you already have your infrastructure in place, but you need people, right? So you start at that end of the spectrum in terms of where outsourcing can build a team. And then depending on the outsourcer, they'll either bring technology to play, or they're going to leverage the technology you already have in place. They might work on your own accounting system like Infusion or Geneva or WSO, depending on the asset class, right? The second is working with a team that can provide you the technology that you don't have and take advantage of people and technology. And then the third is obviously just throwing everything over the fence and relying on somebody just to do the post-trade processing to allow you to supervise. And these people should obviously be integrated into your environment and be viewed as kind of your own staff, or the synergy should be built. So it shouldn't be viewed as a vendor relationship, but more a cultural alignment with these people. So we're seeing a variety of different paradigms, and it's not one size fits all. I think it varies based on the size of the firm, where the firm is in its growth phase, where it is in its maturity.
Thanks, Marshall. Very, very helpful. So, Lisa, a different question for you is more focused on how does your group focus on client relationships, and are you a one size fits all, one pricing fits all, do everything, or would you rather break that out and let the client pick and choose the scope of their work?
Well, we want to provide like a white glove service. So we want to say we do both. Now, we would prefer just to be employee proxies, to walk in, advise you on your legal structure or help you through your structuring with your attorney, pick your service providers, because we've worked with all of them. So what we want to do is come in and make your operations and your life as simple as possible. So we would rather be employee proxies. And as we don't really like to do little standalone engagements because we want to be part of your culture and we want to be investor facing, and our relationship with you is going to carry our relationship into the market. So if you have a great experience with us, you'll tell your fund manager buddy that he also has a great experience. And so we really want to be part of your organization, which means you're on your day-to-day operations.
Right, we should be an extension of their teams. I think that's what we're really trying to say, right? Absolutely. They should treat it like an extension of the organization. Yeah. And if that doesn't actually happen, I think we've all failed in our roles.
Exactly.
Yeah, no, that's very helpful. And I think importantly, there's a different fit for different groups, but there's a lot of these functions that ultimately need to kind of talk to each other, right? So the biggest thing is really these functions that the investment team, or if whoever's executing the investment documents, will also have that context from that investment to talk to the fund accounting team, to talk to the investor relations team that brought in the money or has to issue capital calls to fund that investment. And so there's I think a tremendous benefit for more of an all-around service provider, an outsourced extension of the staff versus someone who comes in and just does one static job, right? And I think that's
you have to take the holistic approach, because then you're seeing where the income comes in, and then you're seeing how it goes out, whether it's in your cap statements or your tax reporting, which is always important to your investors. So it's, if you see the big picture, then you're in a better position to advise basically from soup to nuts on how your reporting and your income gets out to your investors.
Exactly.
Well, plus, I think I would add, most likely given the size of the advisors that are on this call and that we're talking to that are potential clients of the groups here, certainly at PPB, they're not large enough to have one person dedicated to each of these functions, right? But I mean, we don't service funds at BlackRock. We service groups who have, our probably sweet spot is an advisor or wealth manager who's got 8 to 10 employees, 2 to 3 to 4 funds, and maybe a billion or two under management. and they want to have that private market experience for their clients. That said, they're not going to be able to find one person to dedicate it to the legal fund structuring, fund accounting, fund operations, audit, and tax. And that's where this outsourced model, where you can bring a team from PPB or somebody else in to kind of service those. And I completely agree with Marshall and Lisa here. We should look like an extension of your staff. Like, we should be able to talk to your investment team on whenever they're making an investment outside of the firm, and also with the distribution team on what's going on within the portfolio.
Yeah, I totally agree, Lance. And Lance, this I'm glad that this slide came up, because this is where I was headed next with you, and give you some speaking time here. What does PPB, or how do you see the landscape around technology and the use of technology from, this slide says a lot of things kind of to me, but the trend is really that technology is playing more of an active role. But there's, the front to back office integrated suites have kind of popped up in popularity over the last decade.
Yep. So again, I mean, I have not seen a push button technology solution that's going to solve all of your alternative investment issues on the fund operation side. Now, there are particular sections or within the process, subscription documents, reporting to investors. Those things have, there's technology there that can assist the advisor. But you also have to learn how to run that technology as well. So PPB uses technology to assist in those in areas like that, to kind of automate and reduce the amount of paperwork. Again, subscription documents is probably the best example where people have tried to automate this. There's a lot of solutions out there. We do offer that. Same thing on the investor reporting side on a quarterly or annual basis. But there's still a lot of human capital needed in the interim, where decisions have to be made, whether it's valuation or stuff like that, where you need somebody with true alternative investment experience, kind of managing the process. I would say PPB, Lisa, we use that white glove service term as well. We employ a lot of technology. I don't want people would view us as a technology company, but we do augment all of our services and offerings with kind of best in class technology.
Yeah, and
from my perspective, just to give you an idea, right? So when we talk about technology, I think our business are all technology driven, right? And so the approach that we've taken is, I don't care what the asset class is that you're trading. From a CSC perspective, we have to make sure that we can account and process and trade and settle and report on whatever's happening. So we've made a conscious decision to be best in breed, right? And so we've got Advent Geneva for our accounting system for hedge fund and equities, right? We've got InvestTran for the private equity, and for the real estate, we use Yardi. So the idea is, no matter what asset class someone wants to trade or what they want to do, our perspective is, yes, outsource it, right? We want you to deal with the management, with the fundraising, right? With the risk oversight, not with the post-trade processing.
Agreed. And Lisa, do you have any comments to add?
No, well, we focus on, what the manager wants to use on their technology. So we're a little different from CSC and PPB, where we don't actually host the technology. We will use whatever technology, like Salesforce or Deal Cloud, or so we are users of a bunch of different types of technology, but we don't host them ourselves, if that's helpful.
Absolutely, yeah. So skipping ahead, talking about an ideal solution, I think, for everyone on this call is outsource CFO and CCO. So the two biggest functions that are outsourced these days, in terms of what we're talking about today, I think are the CFO role and the Chief Compliance Officer role. There's benefits, I think, to outsourcing both of those things. They're both highly specialized, I think, in nature. You need someone that really understands the compliance side, and you need someone separately, typically, that really understands the financial side, financial reporting, getting through audits, getting through tax reporting, getting through, deadlines. I can't tell you how many investors are upset if you miss a K1 deadline, or if you miss you send K1s out on September 10th, they're not going to be very happy. So it's a very important function, and probably, it doesn't get as much love as an investment analyst does, or a money raiser would. But these functions do help the money raisers, and they do help the investment analysts get their work done. So I'd love to kick off that conversation. Marshall, if you want to talk a little bit about what CSC does on this side, and how you handle these two roles.
Yeah, I mean, we are not a outsourced provider of those two functions, right? As part of administration, we might do some of it based on the necessity in our registered or our jurisdictional requirements, right, as a fund administrator, but we don't really participate in that area. We're more of dealing on the transaction processing, the accounting from an outsourcing standpoint. That said, what?
Yeah, I was going to say, let me ask you this, Mark. What do you work at CSC with outsourced CFOs?
Yeah, absolutely. So we definitely welcome working with partners that do that, and we bring people to the table where we can help our clients. We've got a very large referral network, so if people are looking for them, we bring them to the table. I would say that I'm a big believer in the outsourced CFO. I'm a little concerned about the outsourced compliance officer in this environment. Okay, I'm not saying you shouldn't get help, but compliance right now is definitely under scrutiny, and the outsourcing of that is could be a challenge.
Sure. Lisa, what are your thoughts on that? I know this is more your realm of what you do day in, day out.
Well, knowing, with a background in public accounting, and being on the receiving end of many client, as you were talking about September 14th issue of K1s, it's not a happy time for anybody. So where, we fill in is, managing, I consider us a vendor manager. So I understand how important all of this reporting is to our clients. And so working directly with the administration firms, the audit and tax firms, that's pretty much my day-to-day interaction. The fastest that I can get the reporting done, working with Marshall and Lance, to get the reporting done, to get it over to the auditors, to get that audit out the door and right on into the tax return. A happy client is a repeat client. So that's kind of what we do on a day-to-day basis.
So there is a question here. Someone asked, they said, what's the difference in terms of the cost, in terms of percentage, in-house versus outsourced chief compliance officer and the CFO?
Good.
Well, sorry, go ahead.
No, I was going to say that's a good question. It's
yeah. Well, and that's where I like to step in and try to sell our services is, as we were talking about, an outsource or an in-house CCO who's going to have or CFO or controller, as Lance was talking about earlier. That person is going to come at, the person that's experienced enough to take on those day-to-day tasks and to have the responsibility and act as fiduciary to the firm. They're going to come at an increased cost. However, with an outsourced model, you can get that same level of expertise, maybe even better, because, my background is 25 years in public accounting as a tax partner. So, you get probably a higher level of expertise in one group, and you can actually reduce your costs because, we are a service provider. We are a fund cost. We're not necessarily, $400,000 to pay your CFO out of pocket, out of your management company. Somebody's going to walk in like that. They're going to want a piece of your carry. They're going to want a piece of your firm, and you're going to have to compensate them accordingly. And it's going to come 100% out of your pocket. At least in the outsourced CFO CCO model, you can push some of that expense down to the fund and place a little more. Take maybe 25% hit at your management company.
Yeah, good point. I think, a few comments on that as well to kind of round out that question.
As long as it's allowed in your legal docs.
Yes,
I didn't.
exactly.
You said it. I didn't want to. Like, wait.
Needed to caveat that. Yeah.
No, I think you raise a good point. It's very expensive to hire these functions, fully internally. There's also, obviously you can expense an outsourced provider typically to a fund as a fund expense versus an internal cost borne by the manager, again, providing that that's written in the legal documents that way. I think another piece of this is that the internal CCO, and to Marshall's point, an internal CCO is, and goes to the pros cons conversation of today's argument, right? Internal CCO is 100% on board with what's going on within the company, whereas an outsourced CCO, optically, they could do the function very, very well, but optically to the regulators and other people looks kind of not like they're there every day, which they probably aren't. But they probably don't need to be. If the fund is a $10 million, $20, $30 million fund, they really don't need 40 hours a week of this highly specialized, job. So, I mean, how expensive is it to outsource versus not outsource? I think one piece is, what do you need? I think I'd start there. What do you actually need to outsource? What functions do you need as a group or as a firm? And then separately, I think, you got to keep in mind that these service providers, everyone on this call is in this business to make money. And I think sometimes clients forget that they want to reduce costs, which of course makes sense if you can fractionalize things. But if your company needs someone full-time or multiple people full-time to run it, then none of us on this call are able to provide that same exact service at a discount, because you have to pay for employees and make a profit on top of that. So if you think about that, by default, it can be more expensive to outsource. It doesn't mean it is. It doesn't mean it always is, and it doesn't mean it ever is. But it can be, and it really depends on what you're trying to outsource. Now, cost is one thing, value is another, right? So how quickly you have to hire employee number 2, employee number 3, employee number 4 really matters, right? If you're outsourcing on a variable rate, the hiring needs and costs and headache all fall under Lisa, Marshall, Lance, and myself. So I think there's a value conversation as well as a cost conversation that both have to be had independently.
Well, if you think about some of the tasks, Greg, about outsourcing, to really staff a firm correctly, it's never just one person, right? Because that person could go on vacation, right? So they really have to think in the variable cost of, it's not one person that's being replaced. You're going to need 2 people pretty much for any given task, or at least a year, a person and a half, to make sure that any given task within a fund is getting covered, just to make sure that you're taking care of the personnel, the personal time off, vacation time, sick days.
As well as, Marshall, and that leads into another point, is if you don't have enough staff, the partners end up doing this work. And the partners' time, right? The founders and the partners and the people that are need to raise money to survive, and they need to invest that money properly with proper due diligence. They lose 30–40% of their day to operational tasks. They cannot get everything done. I mean, maybe in a short term, but most likely it hinders their ability to grow. So there's an opportunity.
And the optics, right? So if you're in fundraising mode, a lot of this infrastructure, you've got to make a determination as a firm of what it's going to do, or the perception to the investor to raise the next dollar, right?
Exactly.
So I think the perception that cost is the major driver, I don't think it is. I think there are a lot of other things, as you just said, that go into the decision of how to create your operating model based on what your needs and what you're trying to achieve.
I agree. Lance, do you sorry, go ahead.
I think I would actually, specifically to compliance, I would actually take kind of the other route there. We've seen so PPB outsources its chief compliance officer function to a group. And I think I would argue that it's actually more beneficial, because that's such a highly specified role, right? And it's not something you can learn in school, right? I mean, you have to have that specific experience. So all these emerging managers that, like I've been there, when the emerging manager starts, The founder is the CFO, he's the chief compliance officer, he's the chief operations officer all at once. My experience has been the first one that they outsource is actually the compliance function. And if you bring in an experienced, outsourced compliance group, and there's the ACA now that's kind of the gorilla in the room, but there's plenty of other firms out there that offer outsourced compliance services. They can bring the experience to bring a compliance program to your firm and implement that and look like, and again, an extension of your staff, versus, if you just have the title and you don't have any experience behind it, I think that's going to show pretty poorly when the SEC knocks on the door.
Yeah, I agree, Lance. It's sort of three-tiered, right? What's the worst thing that regulators can see? Well, that one person has 4 different roles within the firm and they're the CCO as one of those 4 and they don't care about compliance, or they're not qualified, or both. The second is outsource CCO, which is much better, and arguably, depending on how you do that, what firm you use, and how involved that firm is, can be as good as an internal CCO. I think the holy grail, bigger firms typically want an internal CCO, I think, at the end of the day. I think that's kind of the top peak, but again, it's easier said than done when you have to.
Right, and I mean, that's 300,000 in today's market. So you can do the math of, at what asset level you can afford a $300,000 position on top of your CFO.
With support staff to support the CCO, if you're that level, right? That's the hard part.
Right.
Yeah.
Well, and that's one of the things that we've decided to do. If we would rather outsource a CCO position unless we are serving as a CFO. Like we will not do standalone CCO services because there's other firms, as Lance was talking about, that actually have an expertise in that. So we will serve as a CCO on, with a manager where we are the CFO, because you have to have your hands in everything, because if you're trying to piecemeal that, I think that can be a high risk. But one point I wanted to make on where an outsourced CFO can make sense is like when we're plug and play. So say you're either in a position where you need to launch, you've got the capital ready to go, you've got people wanting to give you money and you need to deploy it. A benefit of having an outsourced CFO is you can go to our group, we can step in, and if you ultimately want to bring people in-house, we can serve as just an interim, get you up, get you going, get you running, or you have a CFO that's ready to retire. I mean, I've got both of these situations at play right now, and with clients that I've worked with for over 20 years. And so right now I'm in a situation where we've got a CFO, she's ready to step off, and it's, rather than try to teach somebody everything that she has to do, I just walk in and pick it up and move on down the road, and she can worry about her retirement until they find a suitable replacement.
Okay, so there's another question, Greg, if you can ask your panelists, and we need to cover our sheets too. So emergency manager is asking if we have a limited budget and we need to hire first outsourced person, he or she should be CCO first or the CFO first. So please ask them.
That's a tricky one. I think without knowing the specifics, it's very hard to pinpoint which one you should hire first. I'll let the panelists also chime in on this, but I think that one's easier. It's not a simple question of which one comes first. It depends on the firm and what partners, staff, experiences, strategy, etc., that you have going on.
Yeah, I mean,
I'm going to vote for CFO.
Yeah,
CFO.
I mean, I agree. As a CPA, I'm going to say you have to have the basic books and records, right? If you don't have that, the CCO is not going to matter. I guess I would say CFO first, but I mean, it's 1A and 1B. So.
Yeah. Marshall, you looked like you nodded in agreement there.
I concur, right? I think you need a CFO first, but that's.
Well, that and depending on the size, right? If you're a small, low budget startup, the CCO, I mean, most compliance requirements don't kick in until you're at least 25 million anyway. So
Exactly. And with the CFO, you know, the person that you're going to bring in as your CFO is probably going to have a background in public accounting, who's probably going to be up on a lot of the basic rules that are at least going to get you through registration.
yeah, I would agree with that. So what to look for? So when considering technology hosting providers, I mean, we kind of already covered this, so I don't know if we have to cover too much more of this, but you know, I think the number one thing you can do is identify what your goals are for your business, because a fund is a business, right? In and of itself, it is a business. So I think figure out what your goals are, then figure out where the gaps are, and if it makes sense to outsource the entire thing.
Well, I
That's
also
where
think with the new cybersecurity rules are going to drive a lot of the outsourcing that should be looked at, right? Because of the new rule set, this is difficult from an infrastructure standpoint to manage on your own if you're not a technologist. So, and I think that there are firms that are specific to our industry that should be talked to. It's not like a generic outsourcing firm. It's someone that's got experience in the alternative investment management, the solutions, the software, and the required SEC rules.
Yeah, I agree. Lisa?
No, I totally agree, which is a part of what we offer, because we do have it. We can't be your MSP because we have the expertise, and we came from one of those outsourced, you know, our platform came from one of those outsourced providers.
Lance?
And I think that's the beauty of an outsourced CFO shop that's set up correctly, because you're pulling people with experience all across the industry. You know, we've got compliance people that come out of that's their roots, compliance. You know, I've come from tax. We've got people that come from audit. So we've got legal backgrounds, and so I think you can successfully outsource if you pick the right firm.
Yeah, I mean, look, we've all been in the investment management industry for
Yeah, exactly. I mean, that's all I've done.
And look, I'm not downplaying our role or what we do, but the two key parts of an investment management firm are distribution and portfolio management. Okay. And I was at two firms prior to PPB, where we had incredible runs. And whenever we talked about who was the key driver of that success, was it portfolio management or was it sales? The answer was never Lance and accounting. And so, you know, whatever we can do, PPB can do, an outsourced group, to allow the investment manager to focus on those two roles. That's, you know, certainly as they get larger, it certainly makes sense to bring a lot of those functions in-house. But as certainly for emerging managers up to a certain asset level, it makes a lot of sense to outsource these things so you can focus on those two things.
Perfect. Thanks, Lance. So this is a little outside of my side. I don't know if you can go back one slide, but there's a slide on enhanced hosting factors to consider. This may be some of you on this call more in your realm than mine. So I'll start. You know, Marshall, do you have anything to kind of touch on this slide? And if so, I'll let you.
No, I mean, this all has to do with the essentially monitoring, but data protection, cybersecurity, right? So you want to make procedures and processes. So whether it's as you know, like a SOC report, you want to make sure that people, if you're dealing with internationally, you have GDPR that has to be dealt with, right? There's a lot that has to be looked at, and you have to make sure your vendors have the right certification.
Perfect. Skip on to the polling questions. All right. So first question, what distinguishes enhanced technology hosting from generic or rack-based hosting?
Fourth question.
Question number 2. So why do firms consider outsourcing back office tasks such as data management and reconciliation? Perfect. So I'm just going to speak to the next few slides directly, and then we've got a few direct topics to cover with the team here. So just to start, what to look for a large cut. Obviously, there's a lot of different pieces, and we've talked about this multiple times in this call. A lot of different pieces that you can customize outsource operational services for. There's administrators, there's outsourced tax preparers, financial statement prep. Every little, you can break that down into even subcategories of that. At the end of the day, you have to figure out what's right for you. So we'll skip forward to the next slide. You can skip forward, Mohammed. I'll speak to, there we go. So what to outsource with the flexibility, obviously, you know, this is again, what do you outsource? What don't you outsource? You know, it typically includes among many different things, but 4 big things we're going to talk about here: reconciliation, performance management, reporting, and data services. So you can skip to the next slide. So reconciliation, I'm going to give this one to Marshall since he brought up reconciliation, I think, earlier in the call. Do you want to speak to this slide, Marshall, about what you can outsource when it comes to reconciliation and the benefits, pros, cons, if there are any cons?
So I think the concept of reconciliation from an outsourcing standpoint is that there's no reason why people in-house should be dealing with the ticking and tying of any type of break. I don't care if it's P&L break, I don't care if it's cash movements, I don't care if it's capital call, distribution kind of banking relationships, right? This is a task that can be outsourced, let people do the grunt work, and you can deal with the more important thing, which might be resolution, or even if you don't want to get involved in resolution, it's management of the process. So this is one of the big areas from a cost savings, time savings activity that's very ripe for the consideration of outsourcing.
Perfect. Thank you so much. Next slide, please. So throw this one to Lisa. Financial reporting, your favorite thing in the world. I'll let you speak to outsourcing financial reporting, what that means, how it's gaining popularity, if you have any other comments about it. I think you're muted, Lisa.
Sorry about that. Couldn't find my mouse. I think still that's a function of the administrator. I mean, what we do is we would review the financial reporting, and especially on our VCPE clients, you know, work with them on getting the correct valuations at year end so we can get the reports turned over into the auditors as quickly as possible. But we don't actually, you know, we may shadow, but we don't actually do the reporting. We rely on the administrators to actually do the reporting, but we assist them on a daily basis, reviewing the NAVs and you know, helping with accruals, or, you know, just making sure everything is booked correctly as we go into audit season.
Perfect. Thank you. And just to add to that, last second there is, you know, I've seen groups that outsource the financial reporting annual reports for the audits, for instance, right, to a different group than the admin. Sometimes, a lot of the times it is the admin that does that work. Sometimes it's not. There's a lot of work that goes into that, but then there's other funds, right, that we typically, I don't think a lot of us on this call really deal with, that have pretty stringent financial reporting requirements, 40 Act funds, BDCs, interval funds that have constant requirements throughout the year as well that I don't personally deal with at all on our side. I'm not sure if any of you do, but that would be another major outsourced task. So we'll skip forward. Performance management. So Lance, do you want to talk about this one? This probably pertains a lot to what PPB does.
Yeah, I mean, so a lot of this is driven by what the client wants. We work with them up front to decide, to work with them on a reporting structure, and the timing, what they want to see, and stuff like that. And we kind of build that into our processes for the deliverables. And then once we get that set up, it's kind of again, this is something that again, there's not a lot of value. Is it important? Yes. Is the process to get to the end there very, very valuable for somebody's time and house? I don't think it is. So, and I was going to follow on to Marshall's point about capital calls and filling out subdocs and all the administrative tasks. It doesn't get easier as you get larger, right? It's the same amount of time to send a wire, to fill out a subdoc. So as your firm grows and you add assets and you're increasing the number of funds that you're invested in, the number of investors that you have, it's a linear increase in your in the time that you're going to have to dedicate to this. So that's just where these outsourced solution providers can add a ton of value.
Thanks, Lance. So we've got polling questions again. We'll go through these two. So the question here is, what is a key benefit of outsourcing both reconciliation and reporting to a single provider? So second question, what is one of the main reasons firms opt for outsourcing in the investment management industry? Let you answer that one. Great. All right. So meeting regulatory requirements. This is we spoke about this FATCA, CRS. In Europe, there's many different regulatory requirements you have to meet. In the US, there is also very many different regulatory requirements you have to meet. So, Marshall, do you want to kick us off and just talk about what you see in the industry, what you see outsourced, trends that have occurred in the past 5 to 10 years? Sorry, you're muted there, Marshall, I think.
Sorry about that. I do see that the regulatory environment has changed, right? It's become more difficult. The rules have become more stringent. It is difficult for one person to understand all the rules. So we do see firms more often now working with a third party to come in and provide a framework around regulatory reporting and assist in this process. Some will be done by the fund administrator, like if you're talking about AFM or the regulations in Europe about what has to be done in Luxembourg, right? That's typically a fund administrator kind of function. But the other functions, we're definitely seeing people using an ACA or other outsourced providers to help them through this process.
And Lisa, what do you see in on the regulatory requirement side?
Exactly the same. I mean, it's staying well. I'll add to that, trying to stay updated on all the K1 and tax changes. You can add that in there as well. That's rules have changed since I left public accounting a year and a half ago. So it's one thing to note is it's not getting less expensive to run a fund, and I know a lot of times clients would have issues, with fee creep. But, as we've been talking this entire time, regulatory requirements have gone up, changes in tax laws, changes in audit laws. Everything is becoming more expensive across the board from a compliance standpoint. And so that's where, maybe it makes sense to start outsourcing some of these things, because it's not getting any cheaper. And I don't think it's going to get any cheaper as we keep moving along. But that's my 2 cents on that.
Thank you. And Lance, I'll let you chime in as well.
I mean, same thing. I mean, I'm a CFO. I have a CFA and a CPA, and I struggle to keep up with all of these different acronyms. And I'll get a question on a subscription document into a foreign fund, and honestly, I've never heard of the requirements before, right? So that they're ever changing. Yes, I agree with Lisa. The cost of these things is just continues to creep up. And I think everybody has dealt with probably an audit in the past, years, and the increase in audit fees in the past 4, 5, 6 years. I bet most of them have doubled in that time.
Same with tax, Yeah, bring in Muhammad on that one, but it's justified. I mean, the time and the complexity, just in 1 year, a standard K1 went from, about 6 pages to 26 pages because they wanted to add 20 pages of a K3. So it's not like the public accountants out there are really, hey, I need to make some more money. No, it's the requirements of their time to analyze these new rules, and just they keep piling on. So
It's not just delivering the K1. So once you deliver them, you got to be ready for
answer questions.
The client to call you back and say, where does
what
this
do I do with this?
Where does this go in TurboTax, right? And this
exactly.
Another reason for increasing the audit cost, obviously the less accountants are joining, less accountants are becoming a CPA, supply side economics is the issue, but the big other issue is the regulatory. PCAOB is very hard on the auditing firms and really slapping on the wrist here and there, and then are leaving any firm. And we're very lucky that we have a clean history. No one can find any skeleton online that SEC give us any slap on our wrist or on our face. We're so lucky, and we're trying our best to keep. Even today, we're issuing 4 opinion out of 4, 2 are qualified opinion, and we have no other option just to cover our back and do the things according to the auditing standards. And yes, but also clients understand that reason for those qualification, and we just communicate them well, and they're still happy with us even after issuing the qualified audit.
Yeah, I think one of the trends as well, and this plays into kind of inflation and as Mohammed said, supply side dynamics, regulatory increased requirements on fund managers and advisors both, right? Speaking of Lance's client base, I think one of the other big issues is that there's a lot of these are fixed costs, and when it comes down to smaller fund managers, it's much harder for these emerging managers to get up off the ground in a profitable way than it ever was previously in history. And so it plays into these massive funds continuing to operate and gather assets versus the smaller funds that historically, if you look statistically, outperform. But it's way harder today to launch a fund than it was 5 years ago, 2 years ago, 10 years ago, 20 years ago. And it's not going to stop. So now we'll kind of finish off a little bit with it. There's on the handout, there's an outsourcing checklist for technology as well as operations, where it talks about different pieces that you can outsource and different points to kind of take point with. We've got one more polling question, then we'll end with Q&A. So what is the primary benefit of outsourcing technology and operations in the investment management industry? And that's the end of the content. So, I'll stop for a minute. We can answer any other questions, Mohammed, that come in. And in the meantime, I just want to thank all of the panelists for joining us on this call. I think it was a great forum. Tried to keep it more conversational and focus more on content that we think matters in our industries, respectively. So, thank you, Marshall. Thank you, Lisa. Thank you, Lance, and thank you, Mohammed, for hosting.
Thank you, guys. Thank you.
Thank you, everyone.
Is there any other questions? I think we're.
Yes, there were. I think most of the questions were answered during the interview as they were coming. I was asking there one, but I think we're running out of time. So because of the hour limit, so we can reply them back. I think through via email.
All right. Thank you so much. Thanks, everyone.
Thank you.
Thank you.
Thank you. Bye.